Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are going to focus on the markets. We'll talk to an industry veteran who basically has been seeing all about the investment trends happening in USA, in the global markets, has been a long time into India, and we have been talking to him again continuously over the last many years. Let's bring him into the conversation, Mr. Seth Freeman, MD of B.Riley Advisory Services. Seth, good morning and welcome to the show. Always a pleasure to have you here.
Thank you.
So, Seth, let's start from the fact where everybody right now basically is focusing on, and that is what's happening in the USA at present. We have been again seeing rate hikes continuously from Fed over the last many months, but slowly it looks like basically though the last commentary from Fed was still a bit of hawkish, but it looks like perhaps we're slowly moving towards a pause mode or maybe another rate hike. But the underlying data, what's your observation? Sort of below the interest rates, below the stock markets, what's the underlying growth data, and how's the sort of macro situation looking to you?
Yeah, thank you. The Fed did pause on this last round, but they made it clear that they're reserving their rights, their expectations for an increase. We had a very slight decline in inflation rates. And surprisingly, despite a lot of news about layoffs across many kinds of companies and across different industries, but particularly in the technology and retail and somewhat the healthcare sector, that we are still having a relatively high rate of employment. And actually, one of the Fed's measurements is the employment rate. And so ironically, they actually want to increase unemployment a little bit. So they have to be looking at the data very closely because they also don't want to overshoot and cause greater ripple effects in the economy.
Right. I have a couple of friends there who work on cycles, and the last time actually when the real estate went down, they were investing heavily. And this time also, I started hearing from them that they actually are now seeing some stress in the real estate sector in US, and they're expecting a bit of deepening, which for them actually becomes an opportunity because they start using their cash reserves to really invest into across the asset classes, commercial, residential. What's the situation in the real estate right now?
On the residential side, there is a shortage of homes on the marketplace. There's a shortage of inventory, and partly that's offsetting the natural effect of the fact that basically residential mortgage rates have more than doubled in about a year, and that has slowed down transactions in certain markets. But the persistent low interest rates allowed house prices to really dramatically increase because for house buyers, house owners, it's not really the price that matters, it's the cost of ownership. And so with such low interest rates, the house prices were allowed to adjust. Plus, during COVID, people wanted to buy a house or if they could, to have space, to have a yard and so forth. So at least here in California, in the Bay Area, houses are still selling relatively quickly and at high prices. But needless to say, purchasing power is completely different when interest rates are at 7% versus 3.5%. On commercial real estate, particularly office buildings in the central business district, such as downtown LA, downtown San Francisco, it's basically a disaster. Large office buildings, high rises, are being handed back to lenders by large real estate investment funds because the vacancy rates in these areas are 30 to 35%. There's no real improvement in sight. Many employees are still working from home. And at the same time, there's brand new Class A buildings being finished. So it's a real problem for the existing landlords because if you do want to stay in the city and you want to take some space, well, you might as well take it in the newest, nicest building. And we're also seeing a number of large retail centers. Retail is very soft. There's a chain called Nordstrom, sort of a high-end department store chain. They're closing stores. A very major shopping center in downtown San Francisco is in the process of being given back to its lenders because its vacancy factor was going up to 50%. So I think that they had their loan was somewhere in the neighborhood of $500 million. So it's quite dire in areas of the United States, but it's not consistent across the board.
Right, and from that perspective, how are the sort of markets looking to you, the US markets, and also a view on the dollar, like what's happening there?
Well, in spite of everything I said, we're having a little bull run here in the United States. We've had a decent recovery from some of the losses taken 18 months ago. So it's not all bad, but we have to remember the market is not the economy, and they're completely different. So I think people are feeling okay in general, but there's still a bias towards there's an increasing bias towards emerging markets because there's perceived higher growth rates than we're going to have here. And I think that's one of the reasons India is benefiting from some of these cash flows.
Yes, and let's take that premise and then sort of see India. We have been seeing growth across the board when I see the stocks. Sectors, perhaps technology sector has been slightly under pressure over the last many weeks. But when you take a look at the banking, again, the credit growth has been very strong. You take a look at manufacturing, again, the earnings growth has been strong. And consumption basically has been really sort of gaining grounds, a lot of sort of strength there. What's your opinion on India right now? Is it something where you believe that perhaps growth momentum or earnings momentum, or in terms of the underlying sort of core earnings, do you believe that that perhaps could stay strong versus what's happening in the other parts of the world?
Well, as you know, I've been commenting on this for over nearly 20 years, but this is a long-term growth story, and it's not going to be linear. We're going to have phases. I've always been one to say the automotive sector is going to be fine over the long term, and we've had some serious ups and downs. We've had some shakeouts in retail in India, but it's a consumption story. Look at the growth of the middle class, especially in the last decade. It's been unbelievable. So it depends on one's time horizons. And I think that's what investors have to remember, that this is not a, it's not a 1 year, 2 year, or 3 year story. I think, though, at the same time, we have to be very sensitive to two things. One is interest rates. If we have a situation where the Indian market or other emerging markets decline and the dollar declines simultaneously, it's really a double hit for investors. And they're very sensitive to that. That I experienced that in India a few times. The dollar, we took a hit on the currency exchange, and we took a hit on the Indian market at the same time. So that's a risk, but I'm still have a very strong long-term view on India.
So right now, basically, what are you liking in India?
Well, I actually think that I think tourism. I know there's been big gains in tourism, healthcare, some basic manufacturing, and I still think there's going to be more. Continue to see growth in healthcare related themes, whether it's pharma and so forth. There's still tremendous pressure on the U.S. healthcare system. it's going to continue looking for lower pharmaceutical prices, and India is obviously a major manufacturer there. But I'm pretty keen on the tourism, both domestically and internationally. And what else in India? I think we're still going to see a continued development of retail concepts across India as well.
Right. So when you say tourism, it's more about the hospitality, the hotels, or like what all actually you are seeing in that?
Yeah, hotels, services providers for the tourism industry. I think we're going to see, further adoption of systems, technology that's related to hospitality, and probably some consolidation as well, where some of the family businesses get purchased by the next larger company. That's where I see opportunity. But I just think tourism, people, especially younger people, once you get your basic consumer items in place, younger people are looking for experiences. They're not buying as much stuff as before, especially sort of post-COVID. People are still looking to do things and have experiences as opposed to just, like I said, just randomly buying things. Now, of course, India still has a tremendous level of poverty and room, huge amount of room to help and bring in consistent infrastructure and power and water supply and things like this. And this is an area where the government subsidies and purchases are going to stimulate some of these basic industries as well.
Right. In fact, there has been an increase in listing of a lot of new hospital stocks. So even if you actually take a look at the hospital sector, it is now much more diverse. There are a lot of listed stocks in that space. Is that also something which you are taking long-term interest?
Very, very much so. First of all, people can afford more and more healthcare, but also there's heart disease is a particular problem in India, and although there's still a relatively young population, there's plenty of aging people as well who need those kinds of services. I don't know to what extent there's health tourism in India has grown as much as it has in other places.
It is. There is a lot of tourism from Africa, from US. There's a lot of health tourism.
Well, I'm telling you, if I need some major surgery, I wouldn't hesitate going to India, because I know the quality of the service and the warmth of delivery would be high. So I think that's a growth area as well.
Sure. And also, just taking a step back here, and then I'll come back to India again. When we talk about all those sunrise sectors, large population, growing middle class, growing income, and then we're in that sweet spot when actually you're going from $2 trillion to $6-7 trillion overall GDP, and then with such a large population, stock market perhaps is in the best spot ever again. But then when you look at that, and then when you compare yourself with where the other Asian economies are, what are US investors really thinking at this stage at present? Are they really thinking about investing more and more in India's story, China plus one story, or right now they're also thinking about valuations within Asia? What have been you hearing from them?
It has to do as much about fund allocations and the fact that there's so much index investing, and how much is allocated to each country, as much as frankly, stock picking, sector picking, and macro trends. But so you have several kinds of investors, right? You have sort of adventurous investors, you have index investors, and then you have more adventurous institutional investors and hedge funds. So, and some sovereign wealth funds. And I do think that India is going to be receiving some money from the Middle East. There's been a tremendous wealth accumulation effect, especially over the last 2 or 3 years. So it wouldn't surprise me to see more Persian Gulf countries allocating a disproportionate share to India. But I don't know how many. India is more mainstream than it was 20 years ago. But I think that it's still, for many investors, a country that they don't know too much about.
Right, and from that perspective, the sectors even talking about, perhaps what about the sort of main sectors which usually are in limelight, banking, technology, or maybe energy, a bit of different services. What's your opinion about them?
Well, banking is a pretty good proxy, other than when there's fraud and other problems in the banking sector. But it's a pretty good proxy for economic growth. And certainly, as savings rates go up and industrial development goes up, and just the general trends continue, banking and brokering should remain very strong in especially long term in India. I think also the insurance sector should, which is directly related to both the economy and wealth accumulation, and the
Right.
fact that insurance companies themselves are a major source of investment and loans, that they should continue to do very well. And for foreign investors, it's probably a relatively attractive place to invest.
That's very interesting. Insurance, indeed, again, basically, a lot of insurance companies are also arms of the banks, also. But insurance stocks actually also have reasonably done well over the last couple of
Mm-hmm.
years. From a banking perspective, private banks, top large cap private banks, have you been investing into any of them?
Not recently. We've had a few issues with some of the bigger private banks, especially the ones that were the sweethearts a decade ago. Kind of blew up a little bit, and not so much. But I think selectively there's opportunities there.
Right. And from the perspective of hospitality, I went back to the thing you were liking. Both hospitals and hospitality, what's the kind of flavor at present, mid caps or the large caps? Because even the hospitals, you can talk about the top two three, those actually the large caps, and the rest all actually are mid cap stocks.
Yeah, this gets into the issue of volume and what companies are tradable, especially for funds that have large amounts of money to deploy. They're very concerned about how many shares there are available to trade, and impact and so forth. So
Yeah,
that's a limiting
which you,
it's a
which
limiting
you call as
factor.
impact cost. Yeah, which you call as impact cost when you want to withdraw.
Yeah, and so it's a limiting factor for some foreign investors to look at Indian mid caps. But I think selectively, um, and particularly for probably for private equity investors, there's still opportunities, particularly in the faster growing mid cap. To the extent they can make a deal, but liquidity, share liquidity is a serious concern for larger funds.
Right. And as we move towards the last part of my questions, uh, what like we are right now in June almost, I would say now less than a year away from the general elections in India. The last time, basically, we saw sort of good rally in the markets. It's quite a nice time to really ask you this question: that are the general elections an important factor from a strategy perspective? I know you're a long-term investor, long-term story believer in India, but are these events also a factor where you actually take a pause or you actually double down for a brief period of time? Like how much the Indian general elections actually sort of are a part of your strategy?
There are macro investors in particular that look at political risk analysis, and that's really what this is about. When you're looking at a potential change in party, maybe. Um, uh, there's a lot of scuttlebutt already about available into the press if for investors that want to look for it regarding Congress and regarding Modi's party and who's doing what to whom and who's qualified or not qualified or what did you do 20 years ago or 30 years ago. So this is sort of normal politics. Certainly macro oriented investors are going to look at policies, but I'm not sure. We kind of have it here too. The federal government is important, but a lot of real policies and implementation and growth and so forth really has to do with states and regions. And one thing that investors do need to remember is India is a very big country, and yes, the federal government may make some announcement. They're the national government, but implementation doesn't necessarily come at the same time. India is big. There's the state ministers have quite a lot of power. They have a lot of power over the allocation of real estate for new developments and factories and so forth. So I do think shrewd investors have to be able to analyze India a little bit more closely than just look at national elections, as important as national policy can be. I do think what's very important in the near term is the perception of U.S. investors in terms of India's political view towards Russia and trade with Russia. I think it's very disappointing to have India not take a stand and to be pretty, not even neutral, just ambivalent about what's going on, and to really have exploited purchasing a lot of Russian oil over the last year and a half. I think this could have real political ramifications for support for India that should be taken into consideration. I'm sorry to be a little political here, but I do think this is something that needs to be thought about.
I think good point. So let me ask you one point here. Do you believe right now the foreign investors or the U.S. investors or the institutional investors at present they would be actually really strategizing around that?
I think that as this war continues and analysis of behavior by different countries and choices that were made during the war period, that yes, it could have some implications on foreign investment in India.
Yeah, in fact, the one fun fact would be that India actually is now the largest supplier of refined petroleum products to Europe. So that is something I think which is perhaps something interesting.
Well, and that has to be taken into consideration too. That this is one of the reasons that the Persian Gulf nations have accumulated so much wealth because the European countries did decrease their imports from Russia, but certainly India still is a net oil importer, and it has to come from someplace.
Absolutely. My last question before we close: last 6 months from July to December, are you expecting sort of softening in the dollar? Are you expecting interest rate cuts? Is there any sort of hopes there?
The dollar may soften, but I don't think that interest rates are necessarily going to decline. I think they'll be kept the same. I think if we see some extra strength in the economy, excess strength in the economy after the summertime, that I think the Fed could raise rates again. They're looking at the numbers. I don't really know where the dollar is going to go. In relative terms, it should be even stronger than it is now. But it has to do with the U.S. consumption story, I think. And consumers are, even though consumers have spent a fortune on their credit card debt, consumers just are not buying a lot of stuff like before. And I think that's the consumer economy is the biggest piece of the U.S. economy. So that's what's going to be driving some Fed and interest rate decisions.
Okay, so with those things in mind, and from our view perspective, Seth actually likes hospitality. Seth also again likes hospitals, and Seth has always been a long-term believer in their story, and that is something I think we'll take as a positive part of our conversation today. Seth, it is always a pleasure to have you on our show. Take all the insights from you, understand how actually it's being looked from outside from the Indian market perspective.
Thank you for having me.
And with that, dear viewers, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.